One, two, three.
Welcome
So what's the
to
financial? All right.
we're helping you plan for your future today.
All right, one more time. Ready? Okay.
Welcome
So
to
what's the financial? We're helping you plan for your future today. I'm Deborah Montgomery.
and I'm Damon Montgomery. And today we are going to discuss policy, um, a life insurance policy analysis.
Analysis. Okay,
Yes,
so our previous presentation, the policy review, the reviewer were asking you questions.
yes,
When we're doing this analysis today, Damon's going to explain the questions that you need to be asking yourself.
yes,
These are the questions that you need to ask yourself.
yes. So, a lot of times, a person will get life insurance, and a lot of people don't know what questions to ask. They're just basically putting into the hands of the life insurance agent that the agent's going to take care of them and do the right thing and make sure everything is okay. Okay, so these are some of the questions you, as the client, should be asking. Okay, so what are the policies? Death benefit, if it has cash values, what are the cash values? And what's the premium? Okay. So your death benefit, that's going to be the amount of insurance that your beneficiary will receive upon your death. Cash value. Cash value is normally associated with whole life, universal life, variable universal life, those type of policies. In which case, normally the cash value will accumulate in about the third year, and it's like a savings account. And as you're making your monthly premiums, a portion will go to your death benefit, and another portion will go to the cash value account. Okay. Let's see. Are the death benefit, cash value, and premium guaranteed for the life policy? And if not, what portion is guaranteed? So that's going to depend on what type of policy that you have. Okay. The whole life policy by itself, uh, the death benefit, and the cash value and your premium is fixed. Okay, so let's say you have a whole life policy and it's up to 100 years old. Okay, well that's it. That's why they call it whole life. It's your whole life. It's up to 100 years old. Okay, and basically your premium will stay fixed. It won't change. Okay, if you're paying $80 a month, that's going to be your premium, basically up until 100 years old. Okay, third year of the policy, your cash values will start to accumulate, and they basically, if the policy is left alone and you're just making your premiums or whatever, then this it basically should be guaranteed. Should be no issue. Okay. Only way I can see it not being guaranteed is if you get a policy loan, you get a loan on your cash values, then what'll happen is if you do not pay it back and the person passes away, then it's going to come out of the death benefit. Okay. So, if you have a $150,000 whole life policy, but you owe, let's say, $10,000 in, policy loans from your cash value, then what's going to happen is that's going to be taken out. So instead of 150, you only get 140. Okay. Uh, what interest assumptions are built into the proposal? What interest assumptions are built into the proposal? So basically, your whole life, you're going to get a certain amount of interest. Um, you know, universal life, variable universal life. Okay. So now here's the thing. Some of those are determined by a variable type of interest or whatever. So it may not stay the same. Okay. That's another issue. You're talking about interest rates. You're talking about what the economy is doing. So that may not be a guarantee. If you get a equity index universal life policy, a portion of that depends on the stock market. Okay. So, it could go up or it could go down. Okay. Um, so that's something that you want to have a conversation with your agent about, depending on what type of policy that you do have. Okay. Does the policy pay dividends? Okay, and if so, is any portion of the proposal dependent on those dividend projections? I'm going to say for that one, for the most part, no, a dividend in this case. So when people think about dividends, they're thinking about the stock market. Okay, they're thinking about a company authorizing, or board of directors authorizing the company to pay dividends to its shareholders. This is totally different. A dividend is basically, I believe, it's a for a life insurance policy. For the most part, it's like a return of, I'm going to say, return of cash to you to the policy. Okay. So we're talking about two different types of dividends. We're talking about life insurance policy dividends, and then there are dividends coming from stocks.
Mhm.
So, but that's something that you can really look up, the dividends from a policy. But the question is, does the policy pay dividends? And if so, is any portion of the proposal dependent on those dividend projections? No. I'm going to say no. Okay, because it's a totally different type of dividend. What mortality assumptions are built into the proposal? What mortality assumptions are built into the proposal? So,
I'm asking myself that question. Why is that important? Why
uh,
would that be important?
mortality assumptions.
Yeah.
Well, you're looking at so let's talk about mortality, okay, or mortality table, okay.
Mhm.
In life insurance, you're basically looking at um, the. So let's take it a little further. It's something called actuaries.
Mhm.
Okay, actuaries kind of put the numbers together, and they kind of give you an idea of what age group, men are pass away at, and what age that women pass away at. Okay. So when it comes to your life insurance policy, that's something that is built into it because me as a man, I may have a different premium on my policy as opposed to you as a woman.
Right.
Your policy may be different.
Okay.
Okay.
Mhm.
So in that being said, yeah, mortality is very important. Okay. Also, you're talking about health.
That's what it
Okay.
is, yeah.
All right. So, if I'm an older guy, and also let's say I had health issues, then, you know, my policy is going to be different than probably yours. Somebody, a female that does not have issues, nothing wrong. Okay.
Okay.
All right. Next question is improved mortality assumed in future years? And is improved mortality assumed in future years? Hmm, I'm going to say no on that. Okay. Um,
All right, I'm going to edit this piece out.
yeah.
Why are you answering the questions when we're telling them these are the questions you need to be asking yourself? Why are you saying no as if you have a policy that you're basing it off?
Because
what if theirs is yes?
all right,
What if their
so
answer is yes? I got a mortality. Why is he saying no?
gotcha. I see what you're saying.
I'm not. I'm asking you to explain it and not answer it. Like I'm not saying for you to like you said a couple of answers
Yeah.
where it was like no, no. But I'm saying what if their answer is yes? You just got to leave the question open.
Gotcha. Okay.
You know what I mean?
Yeah.
Okay.
All right. Okay.
So go into the is mortality one again.
Okay. All right. So, what mortality assumptions are built into the proposal? Is improved mortality assumed in future years? Okay. Do you have life insurance through work?
Wow, now that's a good one.
Yes.
Because a lot of people, most people have insurance through work.
Right.
Why should you ask that question? Why should you ask that question to yourself? Because
if you're doing an analysis and you're breaking down numbers and you're doing projections or whatever, knowing that somebody has life insurance already through their job can kind of make you do certain calculations.
So are they like less of a risk because they have insurance already?
I'm not going to say they're less of a risk, but numbers wise, you're looking at maybe they don't need so much insurance.
Okay.
As a person who doesn't have it on their job.
Okay.
Okay.
Yep.
Do you have life insurance other than work? Do you have life insurance other than work? I would recommend that if you have a policy at work, that you do get life insurance other than work.
Yes.
Okay. Okay. So, all right. So those are some of the questions that you can ask. And lastly, we're just going to touch on some of the reasons.
I thought that was separate. Reasons for life insurance.
Yeah, I mean, I'm just talking about. So I just want to read these off. So some of the reasons that a person, put it this way, okay. Oftentimes, when someone looks at life insurance, they just look at, oh, it's about death. Okay. And life insurance is much more than that now.
Much more.
We have so many different types of policies out here now. Okay. It's not just about death. Okay. So first reason, okay, and very important, support your family's expenses. Okay. That is the number one reason to get life insurance.
Ding 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 ding.
Okay.
Yeah.
Support your family's expenses. Pay off your mortgage. Okay. As I said earlier, or in the other segment, there is mortgage insurance. I'm not talking about mortgage insurance that sits on your mortgage and you pay every month. No, I'm not talking about that type. I'm talking about insurance specifically for your mortgage. Okay. It's called decreasing term insurance or mortgage insurance. Okay. How this works is you make your premiums every month as you're paying down your house, your insurance decreases as well. Okay? So they're tied together, they go hand in hand. All right?
If anything happened to you,
yes,
then that mortgage will be paid off.
That mortgage will be paid off.
Yeah.
Okay? That's a big relief.
It's from the death benefit. Yeah. This is specifically tied to your mortgage.
Right. Okay? Big relief.
Big relief. So
many people have mortgages, then they have a death in the family, and that mortgage is not covered. They're still paying that mortgage. Okay? And one of our other segments we'll get into, we'll start dive a little deeper into, some financial planning and how you incorporate life insurance into your financial planning. Okay. It's very important. It can also cover education expenses for your child. Okay. So let's start right there for a second. Okay. Because we have our are you college ready person right here. Okay. All right.
Absolutely. Yeah, we do.
Okay.
We have a Are You College Ready program that helps high school seniors to kind of sort of discover life after high school. So it's not just college, it's secondary school, it's trade schools that we assist high schoolers with the FAFSA. We assist them with the college applications, and definitely any scholarships or anything that are out there to help cover the costs that the FAFSA hasn't met, that the family contribution is under. So, absolutely, we do. So, life insurance is definitely an avenue or a question that we ask when doing that analysis. If they have life insurance and if they're able to tap into that life insurance policy to cover the needs of the student. So,
Yes.
yeah.
Okay. Very good. Very good. Um. Okay. Replace income for your dependents. Okay. Replace income for your dependents. If you're married, and let's say you're making, 65, $75,000 a year, um, anything happens to you, that income is gone. Okay. That's no longer coming into the home. Guess what? Your expenses and your debt is still coming into the home.
Yeah.
Okay. That doesn't go away.
Still got to pay.
Okay. But that salary is no longer there. How are you going to make up for that loss? Now, the person, there you go,
Life insurance.
life insurance. If that person's salary can be incorporated into the financial needs analysis, if they pass away, you at least you know that that's money that can cover you maybe for the next 10 years. Okay, all right, maybe next 5 years.
Yeah.
All right, but you don't want the shit. You don't want the headache of now, trying to replace that person's income. Okay. Uh, Pay final expenses. We talked about this earlier. Final expenses. Okay. Basically, final expenses are, just,
Death.
yeah.
Anything
Okay.
associated with the burial.
Right.
Final expenses. Yeah.
Okay. So there is final expense insurance, but as I said, that's basically for someone that's 50 to about 85 years old. You can get a final expense policy. Okay. But final expenses are final expenses. All right. That's your funeral cost. That's your burial. Okay. And you know what goes into that. How much is the coffin? Okay. All right. The grave, the lining in the grave. Just so much stuff that goes into that. Yeah. Everything that, you want that covered. You do not want to, oh, how am I going to figure out? Oh my God. How am I going to bury this person? How am I going to have a funeral for them?
Hence the whole GoFundMe when they can't
Right.
cover because the person either one did not have a policy or two had a final expense policy that wasn't enough. But on average, that's the cost. It's very expensive. It can get very expensive.
Yes. Yeah. Yeah. Create an inheritance for your heirs. Oh, that's a big one. Okay.
Gentrification
Yes.
that we are now having, people.
Yes.
We're now having it.
Okay.
We've been saying it for years, but we are truly actually acting on it.
Yeah.
I see us, our young people. That's the conversation. The topic at hand is generational wealth. And one of the key things to start is through a life insurance policy.
Right. Yep.
Yeah.
Very important. Pay federal and state. Pay federal and state estate taxes. Okay. So depending on the situation, depending on your estate being if it needs to be probated, Sometimes you can, you can look at getting a trust. Certain ways you can set up your will. Okay, um, to avoid that. But if you do have to pay it, at least the money's there. Okay.
Mhm.
Create a source of savings. Very
Yes.
important. Very important. Okay. Um, you know, you can actually structure the way you want the savings. Okay, that you want to leave for your beneficiaries.
Yeah. And that's in addition to, having your 401k
Right.
and having your other savings. So
Right.
this is
Good
an
point.
added
Yes.
benefit
Yes.
for your savings.
And provide for charitable contributions. Maybe you want to provide for your church, maybe some other organization that you belong to, and you want to donate to that organization. So, you can do that, with your life insurance.
And you've seen the Lifetime movies where they leave everything to the dog, or they'll leave everything to a charitable donation, and the family members are sitting around reading the will, like what?
Yes.
But he left all his money to, PETA, the PETA Foundation or something, a charitable organization. It happens.
Yes.
It does
Yes.
happen.
Does happen.
So,
Okay. Well, that's going to end our West Oak Wisdom segment today.
awesome.
Until next time,
Yeah.
just uh, you know,
Thank you for all the West Oak wisdom,
yes.
West Oak Financial, where we're helping you plan for your future today.
Thank you.
And that was 2 segments, by the way. I'm breaking that one up
Okay.
because you went right into the